Hello, hello, hello. Good morning. Happy Tuesday, everyone. Last day before Fed rate hike day. Big earnings after the close. How's everyone doing? Good morning, Patrick. Where's everybody in the chat today? Where is everybody? I see people watching it. Oh, well. All right. All right. Well, when you can come on in, please do. We'll get straight to it. Red Book coming out. There we go. Good morning, Connor. Red Book coming out a little lower than previous and still negative. Numbers are all good, looking good, although housing holding up better than forecast. Year over year, only down 1.7 versus forecast of 2.0. Month over month, forecast 1.2 and up 1.5, just down a little from previous. So the home prices coming in. We have consumer confidence, minor number coming out 30 minutes after the cash open. We have Richmond Fed manufacturing index and services index also 30 minutes after the cash open. Again, minor numbers, but still expected. What's expected to services are going to pop out of contraction, so that'll be interesting. But manufacturing still staying in contraction, but I doubt that's really going to be the mover today. Good morning, Sterling. Good morning, PMG Trader. Good morning, Jacob. All right. What else do we have? Nothing else different, just double checking stuff. So far, we have a lot of the mega caps rallying today. Tesla was triggered a double bottom pattern yesterday afternoon. You have a lot of healthcare pulling back. I think that was the only negative sector today. Earlier, industrials are slightly negative, but healthcare was negative. And basic materials and technology leading on comm services, consumer cyclical. So far, we have the federal. Let me refresh this. We're not going to 50. They're not doing a 50, but it's fully priced in. Rate hike's not even, because it's 98.9, but it has 1.1 for a 50 basis point. We're not going 50. And let's see if this is, the cut in March is now still a pause, and the cut would be in May. So shifting out again, heading into the meeting tomorrow afternoon. Fear and greed, still in extreme greed. People wonder why I look at that is because it's a very reliable indicator to watch for more significant topping patterns or trapdoor patterns, because we could be setting up for some trapdoor move if we don't get a significant topping pattern. What am I watching for in terms of options? Again, 4,600 is key. We're trading 4,580 area right now. We have more call gamma kicking in up there. It is positive gamma, but the positive gamma is steepening. So we also have some call gamma that's really taken hold, and the deltas, are up there. So we have to still hedge into, or the dealers have to still hedge into a rally. But the 0-day options have been taking care of a lot of that. But that's 45.50. So 45.50 is going to be a very key support area for me, anywhere in that area. And the puts really don't kick in until below 4,500. So but in the short term, from the options perspective, I'm watching 4,600 and 4,550. We already had some earnings out this morning. Spotify was down. GE was up on a big gap up. GM was pretty flat last time I looked. 3M is up and breaking out of a pattern. By the way, if anybody's looking at that, it is not technically a weekly double bottom. Just missed that 75% level. And Verizon was up slightly. But the big stuff, remember, between Microsoft and Google, especially with all the flood into both those with AI-related stuff, those numbers are going to be very key after the close. Then we have Visa in terms of their transaction count and where the consumer sits. And then it's something like Snap, which generally misses. Tomorrow morning, Fed Day, we don't have, I'm looking at Coca-Cola because of the consumer staples. Boeing's always interesting, but that's really all I'm focusing on. And then we have Meta after the close tomorrow and Chipotle, but it's all going to be before that with the rate hike baked in. So it's all going to be at the press conference, I should say. Hey, Agostino, did I say that right? I probably didn't. But thank you for tuning in. Good afternoon. All right, we don't have a potential double top yet. Also, look at this little with the 4-hour Watching for that 4-hour close above the 62.5. Really 45.90. The close here was 45.89.75, right at the level yesterday. Yes, this is a little mini double potentially. That's the only thing I'll be watching going into the day for a retracement move. We could be into a choppier day heading into the key earnings. We did get a bounce back now. We form a more significant potential double top if it trades above 45.96. Remember that 4,600 levels just above there. And the next key harmonic is 46.02. So on any rally, those are the levels I will be using, especially if we can get a key close above this 45.90. We break down, I'm not looking for a 5-minute close below this base. I'm looking for a little longer term close, especially since it could be a slightly choppier day. But that's where we sit. Just looking at the longer term perspective, weekly cycles still heading up. Daily cycles on the S&P are trying to bottom. So we could, especially after the Fed meeting, get another one of those rallies potentially, pushing us up to that 46.45 to complete the 87.5 rule. I'll stress this, even if we break down and pull back to this 4,500 area, there's still not much technical damage. It's more severe than what we've had, but it's still not a major breakdown level yet. NASDAQ, by the way, the potential double, you can see turning into a channeling pattern. So we can't use those targets. Now, we did break out that channel. We're retesting it a bit. But if the NASDAQ can get a real key close above about 15,650, I will be looking at 15.7 to 15.717, then 15.775 area are the targets to the upside. The key support is really coming in at 15.5 for the NASDAQ. And with this better pausing area, you can distinctly see this pausing area. I am using this longer pausing area for the harmonics now. So it would be 15.411 and then 15.339. The Dow, so far a sideways correction from Monday's move. If we get the real big move on over the next couple of days with the Dow, still 87.5 rule, 35,800. Right now, the key support on any pullbacks, 35,460. About 35,460, and the Dow is getting overextended in overbought and cycles trying to roll over. But if it breaks below 35,460, the next area is about 35,300, the prior harmonic with the rising rotation zone. Russell holding the rotation zone. If it starts breaking below yesterday's low, though, I'm watching 1960. We get a 4-hour close below 1960. Then I'm watching for the bigger pullback closer to 87.5 in the Russell. The breakout level to the upside, since we don't have any bottoming pattern, we need a 4-hour close above about 1979. But the targets are still above their 1988 then 1997. VIX hovering around this 14 level going into the to the Fed meeting and the earnings, but there's still no fear in this market. It's just been selling vol and buying risk assets. DAX still caught between the two harmonics, breakouts 16,320, breakdowns 16,190. Other than that, and this, by the way, no, it's not a double top because yes, it has it to 75%, but it's not. This is a sideways move going into it. The notes completed the little mini double pattern on a continued move down. Now, this is where, if you're going to continue, all right, I'm going to just lower a stop instead of taking off the final one. I would be using this 111.10 as the next key target area and trailing, because anywhere between this 111.22 and 111.10 is the reversal zone. You get the close below 111.10, then you shift to the lower harmonics. That's exactly how I like to map out the trades. Keep in mind, we're getting closer to cycle bottoms, but there can still be some downward pressure on this. depending on the Fed meeting tomorrow. The yield completed the double bottom up to the 391.3 target. That's done. If you're going to do the same thing on the yield, then you'd want to use those retracements. Let me pull off this real quick. And you'd see here, 395 would be the next major target. I would still trail because anywhere in here could be a reversal, but cycles getting to the top, but not yet rolling over. 10-2s, triple bottom still holding. Dollar index still pushing a bit higher. So this, especially tomorrow, we could get the reversal move in the dollar index with the Fed, but the next key target on trailing, this would be a trailing for me now, would be 101.60 area with the 50 and a major breakdown. This is the last area before you had that multi-day sell-off in beginning to mid-July before forming that double bottom that completed. Crude, pausing at the next harmonic area, that's 79. On any pullback, for me, about 77 has to hold. Tapping the 200, tapping the 200. We broke above their rising rotation zone, breakout level. Any pullback would be fine above 77. We start breaking back below 77, it could turn into a failed breakout. But I will be watching for a resumption of trend because we also have the 87.5 rule at 81. So 80.75 to 81 is the next key target as long as we don't close below 77. That's how I look at that one. Gold. It didn't turn into enough of a shoulder for me. So personally, at this point, you have a little mini double, by the way, against the key support level is 1954. If you break below 1954, and I am still going to be watching, at some point, I talked about it, it should be an A, B, I don't know if the B is fully in yet, C, to retest at least this low area and potentially break towards the 200 and then form a major bottoming pattern. What I would be watching for first, so for any bullish case in gold, I'd be watching for this little mini double to trigger right there. But if 1954 does not hold, at least on a 4-hour closing basis, I continue to look for the pullback. And based off of this area, let me take this off real quick. Based off of this area, the breakdown target would be 1945 and then 1934. A close below 1934, then it's back to that 1912 area and then a possible breakdown from there. Hey, Christoph. Sure, PMG trader. Let me just get through a couple more markets. Yen. We're having the pause above here. No close above the 62.5, but I'm still watching. If the yen breaks and closes above 142.15, we could make a interesting move to retest the end of June highs. Other than that, that's what I'm watching for. Key support, I'm raising this up a bit. Watching on a closing basis below 140.95 roughly. On a closing basis only, and that's a 4-hour closing basis. Remember, 4 hours. The strongest time frames are weekly, daily, 4 hours if you're watching for key closes. Euro, we're into the bottoming zone, but nothing yet. Now, if we close below 109.99, we could see the continued bigger pullback. But anywhere in here, I'm watching, especially going into the Fed meeting tomorrow, for a bottoming pattern. Remember that 109.99. So any short positions would be in trailing mode because I'd be watching for a reversal. The pound, no close below that 62.5 yet. Still holding, trying to put in a shorter term bottoming pattern. I don't think we'll get any major thing before the Fed, though. Fed is going to be key. But you see we have waning momentum. And the rotation zone starting to flatten out on that 4-hour basis. Spiders, Qs, spiders, slight gap down. This did not hit the 75, so you don't have a potential double top. Key support coming in at 450, 150. Pretty much the same levels hold as yesterday. Remember, use those shorter term harmonics. So your key thing would be above 450, 450, about 455.20, then 455.81 are your levels to the upside. Nothing has really changed with the breakout levels, same pausing bar as before. On a breakout, 458.85 and to 459.35, then 461.27, and then the 87.5. That support 451 to 450, is major. You start breaking below that, where it's back in the rotation zone. That's the only thing that leads me to watch for a shorter term pullback. The Q on the spiders, but I double check it with the E-mini futures. Q's slight gap up above 378. Targets 379.40, which is key. So there's some level of significance there. Then 381.16, 382.87. If we do break below today's established low, major support coming in at 372.50 area. So I'd watch for that to hold. And there's still a gap left behind between the 12th of July and the 13th of July. So on any retest, that is your key magnet price. Tesla, 4-hour little mini double triggered yesterday afternoon, so I'm watching for some upside follow through. I said I was watching for a bounce. We had a pretty strong reversal day and outside key reversal day, so I'm watching for this to move a little higher and to set up another rollover pattern. Okay, so this was a short-term potential bounce only. And so we all know what would invalidate the pattern. A close below 259.13 or a trade below 257.46 takes that pattern off the table. So if you're setting up any, those are some key pullback numbers to watch, because if they're invalidated, we could easily test the 50, and that would wipe out a key reversal day also. NVIDIA, trying to push a little lower. Slight gap up today. Still not hitting the first target of the double. Google, the longer term potential double is still in play. It has not triggered or confirmed. So if this rotates back up again, that'll probably be off the table. But 115.35 is a key level to watch for. And then Microsoft, after spiking up to the harmonic, pulling back, it's actually broke below some key support here. On a move lower, on missed earnings or any bad news, I'd be watching 330. 330 would be key to the upside. Again, on a would be 365, 366. You want to know how to use the harmonics. So if I use this, first of all, it's the when I talk about forward harmonics, it's a trend-based fib extension. So if I was going to project the next minor levels higher, I'd use this low to this high. It's a pausing bar. I'm going to switch to my harmonics. The harmonics are set up with these settings. It's only a 0.125 and a 0.25. So when you do it, it's 3 clicks. All right, it is a key low to a high with a pausing bar, and then see, you can pull back, but you don't want to pull back. You want to click there again because it's an extension. So that would give me my next levels. If I was going to do a reverse harmonic, let's say that we don't technically have a pausing bar yet, but on a longer term basis, but this would be reversed because it's going backwards in time. Okay? So that's the kind of stuff you do, and those are the levels you want to set it up. PMG trader. So there you go. And again, for your retracements, it's just the retracement tool from key lows to key highs. Remember, one that major areas we're watching is a 50 to 62.5. A closing level below 62.5. Minor target is 75. Major target is 87.5. And you can see how that even lines up on this last push up. That 62.5 is held on a daily closing. But if it were to get below that, the 87.5 and the 50 coming in about the same thing. And these setups are just done, again, with 12.5% increments. Why do I use that? Because they test out stronger than the fib numbers. But they're very similar. All right. That's where we sit. Let's just check in going into the open. Going into the open. Going to really be keeping an eye. It has to trigger for me on any pullback on at least, we have to get at least a 1 hour trigger. Unless we get major momentum going into the open for any pullback, because we could be a non-trend day or a choppier day back and forth to retest some ranges from yesterday based off the Fed meeting tomorrow and heading into very key earnings this afternoon. So, and you see here on the 15-minute, you have the prior breakout level, retesting that with some volatility yesterday, retesting again yesterday afternoon. So on any breakdown, 45.77, 45.76 is your key support level. That's where we sit. You are welcome, PMG trader. You have a great day, and that's how you practice with the tools. Practice. That's why we review stuff, and I'm very consistent the way things are done. But then it's up to you to practice and decide if you like it or not. All right. Everyone have a fantastic trading day, and I will see you all later. Bye for now.